Welcome to BetterBooks with Kathy Houston. This is our advanced equity section where we will discuss some topics that affect your equity in your business. Look at the detail in both of these accounts. Shareholder contributions should be money or assets that were put into the business and held for more than 1 year. If shareholder contributions are returned to the shareholder, it is not a taxable event. So let's say that you start your company and you personally put $10,000 of your personal money in the business bank account to get started. Once you're going, you decide to take that out. You would code those transactions through shareholder contributions. Shareholder distributions can be money taken out of the business or personal expenses paid through the business. This should be money distributed to the shareholder throughout the year, and this amount should not exceed net income. At year end, this account gets closed out to retained earnings. Let's look at that entry on the next slide. This is your end of year adjustment, but it is always dated the first day of the following year. The accounting software makes the following calculation on January 1st. Beginning retained earnings plus net income equals current retained earnings. You have to manually subtract the amount of money that you took out of the company from retained earnings. What is an SCorp? An SCorp is an IRS election. It is not a legal entity. When you create your business, you will select either a legal entity of an LLC or a C Corp. Once your entity has been registered with your Secretary of State, you can apply for your EIN number on the irs.gov website. After obtaining your EIN number, you can fill out Form 2553 to make the S election. The S election is a preferable tax treatment. As an LLC that elects S Corp status, it eliminates self-employment tax. As a C Corp that elects S Corp status, it eliminates tax at the corporate level. Who can elect S? Well, there are specific rules for the election, but basically small businesses that are LLCs and C Corps will qualify. The specifics can be found at this link. So when do you elect an S election? Well, you must complete and file Form 2553 by March 15th for the current year, or any time in the current year for the tax election to take effect the following year. There is relief for late elections, so if you fail to file by the March 15th deadline, and this is your first year in business, you can file Form 2553 with your first year 1120S tax return and add the following to the top margin of the tax return. Includes late election filed pursuant to Revenue Procedure 2013-30. Putting that across the top of your tax return will let you do that for your first year. Additional requirements as an S Corp are: the main trade-off of receiving preferable tax treatment with an S election is that the owner is required to pay themselves a reasonable salary and withhold taxes. Another additional cost is having to file a separate business tax return, an 1120S. As a single member LLC that has an elected S, you can file your LLC business with your personal tax return on a Schedule C. Congratulations on finishing the advanced retained earnings section. You're doing great work, and this time will really pay off in keeping your books clean and saving on taxes. Thank you for investing your time and using BetterBooks.